We also have 3 reports. A 2024 General Assembly report. JJ will have some remarks.
Foremost, by way of background, as you know, the Board of Visitors sets undergraduate, graduate, and professional tuition and fees for not only the academic division, but the college at Wise. The College of Wise Center for Teaching Excellence provides undergraduate level courses that meets the needs of educators with provisional teaching licenses and full teaching licenses seeking recertification. So the College of Wise has been looking at its relative competitiveness, Center for Teaching Excellence tuitions in the cost per credit hour. And you can see the information was in your board packet. Obviously, it is in the interest of both affordability and program competitiveness that we seek to ask for this reduction. The advisory board of the College of Wise did recommend this to your approval as well, so it has had a thorough vetting process. I'll be happy, Chairman, to take any questions, but there is a request to approve this tuition reduction for College of Wise outlined on pages 1 and 2 in the Finance Committee book. Any questions? We need a motion. And
Thank you.
Great. Next, I'll turn your attention to the major capital projects. As you know, the board is required to approve any capital project's financial plan in detail. We have 3 for your consideration today. While the Buildings and Grounds Committee considers the project and the sort of schematics and the design, the Finance Committee is responsible to see if there is a sound financial plan underpinning to pay for the estimated capital construction. As you know, my office is responsible to confirm the appropriate funding is in place before any project commences construction at the University of Virginia or at the College of Wise or at UVA Health. So again, there are 3 projects for your consideration. The Institute of Biotechnology, as you know, this is a 5-story building, which will include research labs, expanded animal research facilities, port facilities. The project cost is estimated at $350 million. We have a wonderful gift, and the residual, we are recommending approval for $250 million of debt. The debt will be repaid from a combination of fund sources through the medical center as well as the academic division. The debt is actually a very opportunistic opportunity here because we do believe we'll go back and seek research grants for an increased F&A rate over time. So happy to take any questions there. If not, I'll move on to the next one, which is Hereford.
Any questions?
I have a question.
Yes.
Can you just describe the terms of the debt?
Yeah, so we'll finance it over 20 years. Our weighted cost of capital is about 3.46. The 20-year standard loan is about 4.56%, and it'll commence once the construction is underway. We have, as you know, we're AAA rated, and so we are incredibly fortunate. The work that this board enabled us to do back in 2020 and 2021 to get historically low rates, including 100-year Century bonds.
I had a question, JJ. I don't think it's for today, and it's probably might be Colette or someone else, but I think it would be worthwhile for the board on these major capital projects to just have a refresher of what our process is for costing them out. Not the financing. I think I understand that. It sounds like we're a very strong position there. And I have a lot of confidence that we do a great job with it. I just think it would be good with all these big numbers flying around just to hear, maybe take a sample project or something and just sort of say, here's what we do to make sure we're getting competitive bids, to, you know, what our procurement processes are. I'm sure there's state rules about it. But I would just, you know, love to get 10, 15-minute overview of that by Colette or whoever the appropriate person is at maybe the next board meeting.
We would be happy to do that.
Thank you.
They should include one other thing in their building. They build these buildings so they can last 100 years. I don't know too many missions we're sure of are needed 100 years from now. So one of the things we should also talk about is the standard that we build everything at, the right standard. Certainly we're not looking for inferior buildings, but some of these buildings are built with significant cost for the 100-year goal.
Right. And I know we had one of our recent colleagues, Lou Haddad, was a real expert in this area. We benefited tremendously from his expertise and his fine eye at looking at this stuff. And maybe there are other people on the board who, I mean, I don't know anything about it, but I would just, as a board member, would love to just sort of convince myself that we've got a good, strong, vigorous process. And I'm sure we do. I would just love to learn more about it. Thank you.
So, you know what I think would be a good case study for this is we could walk you through what we've been doing around the Biotech Institute.
Sure.
Which has involved not just UVA's team, but an outside firm that's been helping us to make sure that we're on budget and on time. I think that would be, I think that would be really useful, actually.
Yeah, happy to do it. I guess I would just want to make sure you all understand there is an incredibly robust process around it that's also went through sort of a third-party external review about 2 years ago when we were dealing with exorbitant increases in costs and supply chain issues. So happy to bring it back in June, or we could pen a memo before that, depending on how busy the June agenda is.
Thank you.
Okay. Critically important for the well-being of all of our students, and I know the students will be quite pleased to see this renovation happen so that we can have better ability to control temperatures within that building. The last item for your consideration is the UVA Hospital South Tower fit-out. This was also discussed yesterday. It is floors 6, 7, and 8. I think Wendy articulated sort of the business plan and then the sort of modality of operations of what would be happening there. As we talked about, I think there were some residual questions. The 3 floors are approximately 100,000 square feet in total, and that also includes elevator and some hallway space in addition to the rooms. In addition to that, we've got the original other question was the original building was, I had it, 392 million. Thanks, Colette, for the save. So 392 million was the original building, and then we're adding 120 million to do the outfit. As Colette mentioned yesterday, shelling space is obviously great when you think about not needing it, but maybe needing it for the future, but to go back in and to do the addition, it's obviously costly. I will say at the 120 million, again, we're using some additional, an owner's rep in this case to try to do management of cost control. So we'll be reporting regularly, probably both through the Finance Committee and the Health System Board to give you regular updates.
Could we get just to finish the building, not to build the building, seems like in this unique space. Could we get a quick little tutorial of what at the highest level, what drives that cost so high?
Yeah, I think it's the specialty of the services, and particularly in the pediatric space. But again, we have benchmarks, and we can show you for different size of space what is expected or what's a range of costs.
It's more just education. I mean, I don't know if you think we have a bargain there or we're doing something terribly wrong. The number just on math just seems like a big number.
Yeah, and again, we have all of the relative square footage by type. For example, the biotech, and some of that space is very expensive, the CNGCP. Am I saying that? CNGP. And then things like hospital space. But yes, I think we should just wind that into the presentation in June.
Like a 101 level course. I'm not looking to question fundamentals, what they're doing, just try to understand at the highest level.
Happy to do.
Okay.
Yes, Robert?
Yes. Well, I can attest as one who just spent 6 years building an extraordinary campus at Keswick Hall, sorry to self-promote, that construction costs in the private industry are every bit as volatile, expensive as they are at UVA. Charlottesville just happens to seems to be a bubble, and for whatever reason, whether it's lack of trade, whether it's normally bringing in GCs from the outside, it's just a very difficult market in which to build. And so the consulting firm that we had come in did help us. Lou was very helpful. LF's been looking at this. I mean, you can attest to this market is just a hard one to build in, right?
Yeah, I mean, clearly, I think anyone who's in this market building in the private sector or here is finding that we're competing against each other for tradespeople and so forth. And so it's challenging, and I think the whole construction industry 3 years ago went through some extraordinary times in terms of the supply chain not being able to get things. Prices rose at rates never seen before. And that's mostly behind us, but it's affected now what costs are, and to some extent will be as we move forward. So, but I think the idea of discussing this and having the board have a look at the process is a good one.
Oh, absolutely. Yeah, we definitely should do that. I mean, you could use Darden too. They had a owner's rep, Mike Matthews, which was extraordinarily helpful. I think helped them bring that in on budget and on time, so.
Yeah, and Jim had asked us also to think through doing sort of projects where we've used an owner's rep and projects where we haven't, and sort of do sort of a comparison. So we're working on that as well. Again, I mean, we can dive as deeply as you want, but I think we'll start at a sort of a primer level of sort of the processes and how we do the work today and the relative controls and regulatory approvals we need as a state public institution, and then we'll go from there.
I have just two questions. Is there any debt being incurred? I thought yesterday there was a reference of debt. This is all cash.
No, this is not.
Okay. And then with respect to the 120 million, we're very comfortable that's the estimate because it seems like on the original building there's significant overruns. So how comfortable are we with 120 million?
Yeah, so I think the 120 is the starting number, and now we have to actually do the work to understand what it's going to cost. And we are going to use an owner's rep, and at least in the biotech building, we found the owner's rep quite useful as we get into what might be an expanded budget. Then they go through this incredible value management process, which they've been doing on the biotech building, and it's been unbelievably helpful. So I hope that it's not 120 million. I'd like it to be a lot less than that. I think partnering with an owner's rep, we can try to bring that down if it's possible. But as Elif says and others, it's a difficult market out there. But
if it's not 120 million, it's 140 million. Are we going to know that before we
Yes,
finalize and start the
we would
project?
absolutely
Yeah.
give you periodic updates.
But you wish GMP too, right?
Yes.
Yeah.
So we have found in a lot of our construction going out, because we built quite a bit of stuff in our real estate business, prices are stabilizing because commercial real estate is really collapsing for office buildings and stuff. So it may be beneficial as you go forward to keep checking pricing, because I know steel pricing is coming down and other major, like AC equipment is coming down a little bit or stabilizing. So I would just recommend that we stay close to the cost. And when we get a price that is maybe a year-old, 2-year-old price that they're trying to quote off of, I would really challenge everybody to look at the new go-forward pricing, because those pricings are either coming down or certainly have stabilized.
Mr. Chairman, you had asked yesterday what were some of the costs, why it seemed to be so high. I called some of our folks yesterday. We're putting in a couple new ambulatory surgery units in our ASC, and it's about 600 square feet per operating room, and it's about $1 million to $1.25 million per operating room. If you look at an ICU, it's about $600,000 to $650,000 for an ICU. And then they gave me this other little tidbit that for a normal hospital room that you build, it requires about 2,500 square feet of space to support that hospital room. So it's a bunch of esoterica, but I thought it would be interesting. It's not cheap.
Proves Dr. Kent's point that these things are not cheap to build.
No.
One thing that at the UVA, we have to admit that one of the biggest drivers of construction costs in Charlottesville is our appetite to build. So the fact that we start so many projects at a time, and have for the last 8 years started so many projects, that has got to affect the overall cost. So one thing we do contribute to ourselves is the number of building projects we initiate at this time drives in this working community. I would bet that Charlottesville, the university is one of the bigger buyers of contractors and building supply in the Charlottesville region. So at some point we cause our own problem.
The only thing I'd add is I encourage us always to think of our capital projects in 2 different buckets. One is those that pay for themselves. Things like the bed tower, it produces revenue, it will eventually pay for itself. We can be very comfortable building those things. There are other academic buildings and other things that may or may not pay for themselves. They represent ongoing costs over decades, centuries. Every 40 years, they need new air conditioning systems, they need new roofs. And it's those buildings that the board ought to be, in my opinion, particularly cautious about.
Great. If there are no other questions, I do need chairman
Please.
approval.
Signatory authority.
Right. Well, I need approval for the 3 financial plans.
Oh, I beg your pardon. Yes. Do I hear a motion to approve the 3 financial plans?
So moved.
You have a motion? Second?
Second.
Motion is second. All in favor, say aye.
Aye.
Opposed? Thank you. Motion's passed.
Great. Next item up for your consideration is signatory authority for both the academic division and the medical center by way in the amount per we would like to award contracts to firms associated with RFPs for 2 types of services. First is custodial services, and the second is technological solutions. So everything from desktops, laptops, tablets, and so forth. We are down to the finalists for both of those contracts, so I'm not at liberty yet to divulge the name of the selected vendor. Happy to follow up if that's of interest. In terms of this, obviously, the custodial services is a 3-year contract, and the technological solutions is approximately a 5-year term with 2 additional 5-year renewals. So we would request that you delegate approval for the execution of these contracts, which did go through a rigorous bidding process, to myself, and it's outlined on page 5 of the Finance Committee book. Happy to take any questions.
JJ, the second contract?
Yeah, so thank you, Chairman, I apologize. We, by way of background, have been seeking opportunities to partner with the Commonwealth, and we have been in the area of procurement, particularly successful in being able to leverage really deep discounts. I think it's partly the sophistication of the team and partly because we're quite aggressive. And these contracts, particularly the technological group of computers, laptops, and so forth, the state, the Commonwealth as a whole, has been asked to be able to access those contracts, and we have made that available. So the spend on this could be as high as $70 or $80 million a year, because every state agency will be able to enjoy the same value or the purchasing power that we've been able to negotiate. So again, this has really been a great partnership with several of the state agencies in Richmond. Thank you.
All right, so we have 2 signatory authorities the board needs to approve. Do I hear a motion?
So move.
A motion, second? A motion and a second. All in favor, say aye.
Aye.
All right, thank you.
Okay, next, obviously, there are 2 requests for contracts that exceed $5 million in the medical center, specifically Cardinal Health, which is CAR T-cell therapies, and that exhausts my knowledge, so thanks to Craig is sitting right next to me if there are deep questions on that. And the second is for international staffing with Health Carousel. By way of background, Health Carousel LLC is a current contract and provider. So we do have past experience with them. This new contract hopefully will expand our contract with not only nurses, but also include some medical lab technologists. And again, Craig is here if there are specific questions, but both of those exceed the $5 million. It's been, again, a comprehensive effort by a team of people, I believe, under Wendy, so would ask for your approval.
Do we have any questions?
Is it anything less than 5 million that can just be done without running it by the board?
Anything in a given year under 5 million, there are different levels of signatory authority across the institution. The authority levels rest in my office. So for example, anything above 5 million comes to you, and other EVPs and leaders across the institution have varying degrees of approvals below that. So it's levels rest in my office. So for example, anything above 5 million comes to you, and other EVPs and leaders across the institution have varying degrees of approvals below that. So it's not, again, 3 million sits up with us to 5 million, above 5 million goes to you, and then there's delegated we're a pretty big, complex organization with 30,000 people. So there's some units and vice presidents that have $1 million or $2 million worth of 30.
JD, you might also want to point out that under 5 million, there are certain areas where it does go to either the committee chair or to the rector for signature.
Correct. If there are specific carve-outs as well in which I have to get approval, as our rector just stated. So there's a pretty complex matrix around signatory authority across the institution.
And it's an absolute threshold, and if it grows beyond 5 million, does it come back, or is it just where it starts?
It's any contract in which we actually execute that's above 5 million, we have to bring it to you annually.
My own limit is $10 after that. Permission from JJ.
I would also say we do annually revisit signatory authority across the entire enterprise. Megan Lowe is the expert, so I'll just defer all hard questions to Megan Lowe.
Any further questions? Do I hear a motion to approve the 2 signatory authorities for the medical center? Motion?
So move.
Do I have a second?
Second.
Motion and a second. All in favor, say aye.
Aye.
All right, thank you very much. General Assembly report.
Great, I'll start, and Jim may want to add in some additional comments, but again, special thanks to Jim, the Government Relations team. As you all know and are reading every day, session is underway and is scheduled to adjourn on March 9th. This just gives you a snapshot of the calendar. We provided this as well in advance, so I'm not going to spend a lot of time here. As you know, we initially received the governor's budget, and now we also have the House of Delegates and the Senate's proposals. You can see there is a fairly diverse set of suggestions in terms of the recommended appropriations. You can see, obviously, the House of Delegates funding is the most accretive to UVA. I guess then what I would like to say is, in addition to the operating, you can see variance between the Governor, House of Delegates, and Senate for both the Institute of Biotechnology as well as employee compensation. So all of this we are monitoring, advocating, including our president, early and often, and the budget conferees have been selected and are now knee-deep into discussions. We need all of this information, as you know, to go ahead and to build the university's budget. So for example, a 1% pay policy to a 3% pay policy or something in between obviously has pretty significant financial implications for our bottom line. In addition to that, you can see College of Wise is also has variance here in terms of their recommended incremental funding. And again, obviously, Chancellor is working with the President as well. A couple of other things here. There is on capital-related items in addition to that, funding in the House to build out the shelved space of student health and wellness. So pretty excited about that if we can get that over the hurdle based on the conversation you heard in the UVA Health Board yesterday morning. And obviously, the Senate is authorizing planning for the Center of Arts using our own funds. So excited about that, but also recognize that that's just the first step in a process where hopefully the Commonwealth will offer additional funds for that project. I guess last but not least, the College of Wise planning authorization for the Darden Hall renovation, and we see that in the Governor's House and Senate budget. So I think we're quite confident that that will move forward.
Has there been any progress, one way or the other, on the technology center they were thinking about putting in Wise?
I'm sorry, I need you to restate it.
There was a movement in the House and Senate over the last 2 years to fund a technology center or an investment center down Wise. And
Research.
I was concerned because there's an empty one in Abingdon, so I wasn't sure where that went. And
I'm not completely up to date on it, but my recollection is that the proposal shifted to a planning study at a pretty significantly reduced scale. I think it was in the hundreds of thousands of dollars. And I've not had further updates on that. So that's the last that I heard of it.
Yeah, and it's not included, so it's just the planning study.
thank you.
Okay.
So out of all the things, there's a great deal in the state budget. JJ's just referenced them very quickly. The one thing I just remind the board is with respect to pay increases statewide for state employees, every time there's a mandated pay increase, our response to it is we have to come up with 80% of that. So although it appears to be the state giving these pay raises to the employees, 80% of every pay raise that UVA has to contribute. So it has a major impact on our budget and the necessity for what tuition we set.
Yeah, and we'll talk about this a little bit later, but just to preface that, there is a lot of pressure in the budget right now due to the fact that we have constrained tuition lower than the rate of inflation, and tuition has historically been the driver that we use to cover a vast amount of the cost of the compensation increases in the university budget. So we'll talk a little bit later in the presentation, but all of this work is well underway, and we hope to come back with a budget proposal at the June board meeting with some additional engagement with you all in between now and June. Okay? All right, so if we're going to turn next, would you like me to do introductions?
Yes, yes, please do, JJ.
Okay, so today we have Robert Durden, CEO of UVMCO, and COO Christina Alamard. I have the distinct honor and privilege of working with them on a regular basis, and they will be happy to talk about the performance of the endowment at calendar year end 2023.
Great. Thanks, as always, for having us. It's a pleasure to be here. Good morning. Today, I'm joined by Christina Alamard, COO of UVMCO. Christina's been with us for 20-plus years, and I would say that no one has been kind of more instrumental in driving a culture of excellence at UVMCO. I think we have best-in-class operational capabilities due to her. So the listener experience is always improved when Christina is with me, but she also was instrumental in setting up our advisory committee on investor responsibility in 2021, and in anticipation of some questions on that topic, she also joined us today. So with that, turn it to you, and we'll get started.
Great. So agenda for this morning is to provide a bit of time here, particularly for the newer members of the committee, to just kind of regroup on exactly how we invest, our investment philosophy, as well as our investment process, because that will help any understanding of performance and anything related to investor responsibility. Also, of course, want to talk about the markets. It's been a very interesting calendar year, 2023 and 2024 thus far. So we'll talk about performance, of course, short and long-term asset allocation, and then our overall risk profile for the endowment. Robert, next slide, please. So our Robert, next slide, please. So our board of directors is always where we start. An incredible group of people who help us quite extensively on a day-to-day basis. Want to point out a couple names and faces here. Right-hand side of the page, left-hand side, second one down. George Martin is a new member of the board of UVMCO. We're very excited to have him. Obviously, very well known to this group, especially as the former rector of the BOV. So important connective tissue there. Also have Elizabeth Weymouth joining the UVMCO board, a rock star in the private equity space, and also former chair of the Darden Board of Trustees. So also very excited to welcome Elizabeth. We did say goodbye and farewell on one level to Meredith Jenkins, who turned out at the end of calendar year 2023. We are actually keeping her around the table, though, as our board representative to our advisory committee on investor responsibility. Meredith is the CIO of the Trinity Wall Street Trinity Church Endowment. So lots of investment acumen there that we'd like to keep as part of our family. Speaking of our family, senior staff, this slate of folks remains...
Could I ask one quick question about the board?
Yes.
Sorry for interrupting. Could you describe just real quick, not a long, I'm sure it's a complex question, is, how is the members of the board selected? And what's the, I probably was told this at some point during orientation a couple of years ago, but just a couple bullet points on that.
I'll make a quick.
Jim, yeah.
stab at that, yeah. So it's a self-perpetuating board, and the board looks for candidates with UVA connections, but their primary goal is to find people with investment expertise. In terms of the relationship with this board, we have a contract with UVIMCO. UVIMCO is a standalone private enterprise whose sole purpose is to invest our capital and create the highest possible return. But it is a contractual relationship, and the contract is once it is signed, we have no ability to day-to-day tell them what to do. Does that answer your
But
question?
Jim, doesn't the board also have the capability of appointing members to the UVMCO board?
Yes, so I'll go ahead
I think
and,
that was one of Doug's questions.
The rector, I think it's the rector.
Yes.
The rector can recommend one appointment. So I held that position.
Right.
Christina, you tell me,
Yeah.
who holds it now?
George Martin.
George?
correct, but it's actually a little bit more complicated, and thank you for the question. So our board can float from 9 to 13 individuals, and in one way, shape, or form, 4 of those, at a minimum 9 folks, are appointed by the university in some way, shape, or form. So we have a president's designee to our board, which is JJ and always has been the COO of the university. And then we have a formal BOV rep, which is George. And then we actually have 2 more Board of Visitors representatives that are appointed by the rector as well. So at this moment in time, that would be Jim and Tim O'Hara.
Great, that's exactly what I was interested in.
Yeah.
Thank
Their
you.
terms are for how long?
They're all staggered. It's the BOV reps I always think of as kind of a 4-year term. Sometimes we've done 2, sometimes we've done 3, sometimes we've done 4. We have 9-year eligibility overall.
Elizabeth Weymouth just came on.
Yes, as did George Martin.
Replacing.
Correct.
Bert?
Is there any other criteria for UVMCO other than to maximize return within a risk portfolio that we accept, or they accept?
Given the way that the appointments are made, as Christina's just said, there is a good working relationship, so there's a constant dialogue, and UVMCO's always been solicitous of the board's opinion about things, but contractually, our ability, what we would have to do is to modify the contract, wait until it expired and hire somebody else. We might have some kind of nuclear option. We could try and cancel the contract, but the contract requires that UVMCO produce the maximum return for the board. It does not require them to respond to any other requests.
Mr. Chairman, is the Board of Visitors ultimately legally responsible for all actions of UVMCO?
No, it's an independent entity.
Totally independent, so if UVMCO crashed and our investments went to zero because of malfeasance or whatever, we don't have any legal exposure to that.
Oh, we'd have no legal exposure. I mean, we'd be very unhappy financially, but
Yeah, and I guess I would just say, separate 501c3, 2 years, the CEO reports into the board relative to discuss about performance. There is constant dialogue in terms of engagement with UVMCO, and they are in the top quintile of performance.
And back to our investment objectives, I think it's a great question. I think of it first and foremost as maximizing the return commensurate with the risk tolerance of the University of Virginia. A secondary objective is to preserve the purchasing power of the endowment over time. So think of that as having a return that meets or exceeds spending plus inflation plus fees. And then third, this is less of a formal objective, but something we take very seriously. We want to demonstrate excellence in the industry, and so we do look to peer returns as a barometer of what's possible for folks who invest in a very similar manner for similar clients. And so we're really looking to kind of ideally shoot the lights out on all three of those metrics over the long term, and definitely not over any 1 or 2 or 3 year period.
I don't know why I prepared the next slide. It's my slide. Anyway.
Well, we skipped
literally said
we skipped
everything I
over
was
my
gonna say.
assets under management slide too.
I just wanted to make absolutely clear that my question was meant just to educate myself,
Yes.
and I could not be more pleased with UVMCO, and I think I speak for the whole board, I think, when I say that. I just was wanting to understand the nature of the governance relationship, and your explanation was very thorough and clear. Thank you.
And Doug, also, I mean, we have, as Christine said, 9 to 13 board members. We have 10 now,
Right.
9-year terms. So one of your questions, how do we select folks?
Right.
We are in the enviable position of being able to take our time.
Right.
We get to know our prospective board members over multiple years, work with our governance committee for nominations. I think, you know, I've worked in other settings before, and UVMCO has an A+ board culture and an A+ collection of people around the table. Part of this presentation always is to give comfort to the BOB. Investing is an uncertain endeavor. So you can take comfort in the people that we describe, the risk management that we will describe, as well as the diversification that we pursue within the pool.
Thank you.
Really quickly, Robert, I think it would help everybody in this board, maybe half page or one pager. There's a historical story behind the creation of UVMCO, and it makes complete sense. The endowment was very small. The endowment started to grow in the early 2000s. Alice Handy managed that internally, and they had a committee of financial people, but it got to be too cumbersome to start to grow, to manage this endowment kind of in a collegial manner, even though the people around the table, Tom Saunders, Bill Goodwin, and others, extremely smart investors, but they saw the need to create and separate out UVMCO, much like Yale, much like Harvard, much like these other endowment models that have proven the test of time. So I don't know if there's anywhere in your file where you have a one-pager of the history of the creation of UVMCO. It might be helpful just to circulate it around.
We have the 1-page version, we have the 15-page version. Yeah,
I know, there's a lot of sausage making, I realize, along the way.
Yeah, no,
but,
to add a little bit of color to that, so the kind of term UVMCO was coined in 1997 when UVA chose to create a subcommittee of the finance committee in order to really be able to access the alumni that have, you know, incredible investment acumen. And then we were spun out in 2004. There was a number of reasons for that. First and foremost was FOIA. So there's a lot of kind of Freedom of Information Act activity across the industry. And so the best and brightest investment managers around the world were kicking out public universities and public pensions because of FOIA concerns. So really wanted to protect the university from that. Second of all, there was a decent amount of capital flowing into the university-related foundations across UVA, all of whom were setting up their own investment committees, their own investment pools, and it was really a attempt to separate UVMCO from UVA in order to also engender trust. We're basically a university-related foundation, much like the Darden Foundation is a university-related foundation, the Alumni Association, et cetera. So when we were spun out and looked and felt more like one of those organizations that enabled us to collect the capital across the university system and have one center of excellence. Third reason was compensation. It's very difficult to attract and retain investment professionals within a public compensation system. So that's another reason why, you know, a number of universities have done what we have done. And it's been, quite frankly, a wildly successful home run for UVA and for the foundations. And so, again, really great example of UVA getting their corporate governance correct.
What foundations exist that aren't managed by at the University of Virginia, that are not managed by you guys?
The simplistic answer is zero. So there's some foundations who don't have, you know, long-term endowment capital that can be invested by us. And then there's one that has one piece invested elsewhere. It's the minority of their capital. Actually, there's probably two that have a minority position with another firm, but I think of it as 99% of the capital across the system that is long-term in nature is with us.
And who declares what the official endowment is of the university? Is that a number that comes from you guys, or it comes from you, JJ?
It comes from UVMCO.
And what number are we currently saying?
You mean the collective total of.
Right, so I think Robert has that in his slide.
Yeah, I think that's in this morning's
Yeah.
report, so. The only thing I would add is something else that the university gathers from this, or gains from this relationship, is fees. This organization, UVMCO, charges us far less than we could get anywhere else in the market. So it is a screaming bargain, particularly considering how well they perform. And then within that, Christina just referenced this, but I want to make it clear, the employees that manage this money have incentive allocations of their own. So they are encouraged to perform internally, and they get some reward based upon their performance. So just as UVMCO generally's goal is to maximize returns, within the organization, there are people maximizing returns themselves.
Correct. We spend a lot of time aligning the interests of our staff with that of the university, to your point. Absolutely, in terms of fees, my favorite thing is not the fee itself, but the fact that we give it back when we don't use it, and we have a pretty long set of examples now of writing a check back to the endowment for any unused fees, which is something you really only get when your investment manager is a not-for-profit.
That is true.
Sorry, don't bring me.
That's great. We've covered some of this. So again, we measure ourselves versus the required return, that is spending plus inflation plus fees, as well as against our passive policy portfolio. But I do want to stress as well that we do not invest in the passive policy portfolio. We invest very differently from the 75-25 purely liquid passive mix. We don't do that for fun. We do that because we don't think that passive policy will generate a return sufficient to meet our required return. And as I'll show in a minute, historically it has not. So we take risks relative to that passive policy. We take concentration risks. We have different levels of geographic exposure, sector exposure, market capitalization exposure. We invest in 45% private investments. We invest in data centers, for example. Data centers would not be significantly represented in the MSCI ACWI. We invest in them. We invest in early stage venture capital. Certainly that is not represented in the MSCI ACWI, which is our equity component of the passive policy index. In essence, we're trying to pursue unfair advantages that the rest of the market does not have. And we're using UVA and UVMCO's reputation, its long time horizon, and its experience doing this for 4+ decades to seek those unfair advantages. And that has yielded a nice return to us over time. But it does require a long time horizon to measure our performance. Not in every respect, but in many respects. So with that said, over the long term, years, first, meeting our required return. That required return over those time periods was, call it, about 8%. And so 11.5, 9.2, 9.7, comparing favorably to that. Also beating the risk, to that. Also beating the risk target set in the policy portfolio that I just mentioned. The policy portfolio tends to lag our returns over those time periods by 2+%. So we're meeting those two primary objectives. And as I mentioned, over 10 and 20 years, that policy has not been sufficient to generate the return necessary to maintain the purchasing power of the endowment. So again, we have needed to do that, needed to take the different kind of investment risks than the policy over that time period to meet our objectives. Over 1 year, we have not. 1 year is not a good time period over which to measure our performance, but we do look at it, of course. And of course, we want to seek to understand what we could do better. Investing in privates is not one of those things, but in calendar year 23, exposure to emerging markets in excess of what you would see in the MSCI ACWI hurt us. Exposure to biotech hurt us. Exposure to small caps hurt us. We tend to be more weighted to small and middle capitalization companies than the mega caps that drove the 23% MSCI ACWI return, notably by the Magnificent Seven that everyone in this room has heard so much about. Due to the privates, you would always expect to underperform to some degree. Privates lag on the up, they lag on the down, markets tend to go up, so privates tend to lag in a way that is a headwind to short-term performance measurement. But of course, we've been paid for that significantly over time. And that significance is kind of shown here. Again, you can see over 1 year, if we underperform by 13.2%, you probably can't do this in your head. I wouldn't expect you to be able to, but if you were to collect the buyout, growth equity, venture, and real asset returns, and those are our primary buckets for private investments, you'd see that on a kind of weighted basis, they returned about -1%, versus a 23% gain for its relevant public equity benchmark. That drove 10 of the 13 points of underperformance. And so you might ask, well, could you have sidestepped that? Well, certainly not. When we set up investment partnerships with private managers, those are 10-plus year commitments. You can't kind of come in and out of those even if you wanted to. So then the question becomes, have you been paid to take that risk over time? And there I would ask you to kind of move your eye to 5, 10, and 20 years, and maybe specifically 10 years just because it's representative. There you can see that the returns to all of those private asset classes that I just mentioned exceed those of the MSCI ACWI. So most notably in venture capital, where over those 10 years you compounded your capital at 27.6% returns versus 8.5% for ACWI. So it has paid to be in these asset classes over time. It just might not in one single year. Again, this does not mean we can't do better. We always want to do better. When I look at our public strategies, so public equity, long, short, absolute return, and I've said this to you over the years, we want higher levels of outperformance in those strategies. That's a point of emphasis. And when we seek to improve something, we like to see good near-term results. And so on a one-year basis, where would it be appropriate to look at kind of shorter-term returns? Maybe absolute return, where we've been pleased by the 8.9% return versus its more historical average in the 5s and 4s. Hopefully that sustains because we want outperformance in all of these strategy line items, and we certainly want outperformance on a total equity basis versus the MSCI ACWI and our diversifiers versus U.S. Treasuries.
Robert, can I ask you about well understood? You are not making direct investments. You're picking managers who are then investing, right?
That's correct.
And your contract with those managers is 10 years, 5 years?
For private investments, it's a minimum of 10 years.
Right. And so you have basically said, here's a portion of UVIMCO's assets. You manage those for that time period. And you don't exercise control over their investments. You're
correct.
trusting them.
Yes.
And is that the entirety of your investment portfolio?
Essentially, yes. We do manage in-house our cash and fixed income, because there we're not seeking outperformance. There we want to control the amount of fixed income exposure that we might have at any given time. But in all these other non-cash, non-fixed income line items, they're expressed through manager relationships.
Right. I just think that's an incredibly important feature of your work that's not very well understood.
Yes. No, and that's rooted in the premise that they, with specialized knowledge, can be so much better at their strategy than we ever could be. So we have managers who might have some expertise in distressed Argentinian bonds. We do not possess that. We don't.
I do, but
We don't want that expertise in-house. Certainly if we were trying to seed or participate in the Series A of promising new AI companies from Charlottesville, we'd be at a huge disadvantage to someone sitting in Silicon Valley. So our relationships there drive that. Yes, Bert?
How big a player are we in the average fund that we invest in?
It really ranges from small to as small as 1%, but we will be a larger relationship for a manager, for small managers, new managers. You might sometimes see that in the real asset space, where we want to write, call it a $50 million check to, say, a $400 million fund, in which case we'd be 1/8 of their capital in that fund.
That would be very big. That would be a very big position for us, 50 out of 400.
Yeah, and we We have policy guidelines in place for all of this.
We do, and we don't like to be too large a percentage of a manager's capital because we don't want them to be dependent upon us.
Robert, following up on the president's point, you might also talk for just a second about what insight we have into the assets that are owned by the managers we are.
There too, it varies. And we're not relying necessarily on soft copy reporting to have that insight. We're in touch with our managers, very often. We have 20-plus investment professionals at UVMCO, the vast majority of whom spend all of their time on bottoms-up manager selection. It's really kind of my job to kind of put this together. My job as the PM to manage portfolio construction. But most of the team is in touch with our existing set of managers and our prospective pipeline managers every day. That's what they do. Insights, though, real-time insights into our portfolio are often, from a contractual basis, lagging. So we receive quarterly reports from our private GPs. So if we want to know something intra-quarter, we have to get on the phone with them. In liquid manager instances, we do receive monthly reporting, but it's often simply performance. We might see detail on their holdings on a lagged basis, maybe 3 to 6 months. For managers who short securities, they need to maintain that confidentiality because their performance can be significantly impaired if it becomes well known that they have a position in the market.
I have a question.
Yeah.
If we wanted to start a venture fund for biotechnology here in Charlottesville, like UPMC has done, they've invested $1 billion up through 2024 and done extremely well with it. It builds out the ecosystem for biotechnology. Might sound a little selfish because I'm talking about it, but I do think that we have to maybe look at that for the researchers coming in to give them a runway after they do their research that may want to start companies. I don't know what the process would be. I know other medical centers and universities have done that. It's to try to establish it internally so we can build that ecosystem, whether it's done strictly at the university level or private university. But I think it would be very valuable over a period of time to look at that because it builds on what we're doing here. And I think it'll help us recruit, and certainly I think we'll make money at it, but I want to consider that at some point.
Love to talk to you about that, and I'm good friends with JC, the CIO at UPMC, and could leverage his knowledge as well.
Yeah, if you could talk to him about it, because they've done really well. They not only invest in the researchers and the companies coming out of the university, but they do outside research to diversify, outside investment to diversify, but it would really be helpful longer term here. We don't have to do it tomorrow, but it'd be something to talk about.
Christina referenced a third objective of ours, which is to compete well versus our peers. This is a bit of a squishy goal because, first of all, our peers might not have identical objectives to UVA. What a school in the Midwest, a private school in the Midwest is seeking to achieve with their investments might differ slightly from ours. And then also, we don't get great transparency. So we will see how they perform, but we don't always know how they've done it. But all of that said, we do want to compete well versus peers because generally we're prosecuting a similar investment universe. And so there too, I would assure you that we've done a good job over time. So we measure that against specifically a 29 peer set of $5 billion and above endowments in the U.S. And over 3, 10, and 20 years, we've achieved a first quartile return, in over 5 years a second quartile, missing out by the first quartile by 20 basis points. Again, we don't to do well against peers, and we have over time. I can tell you that we will look foolish. I will be here in September, and we will have dropped the 49% return that we earned in fiscal 21, and we will be underperforming our policy over 3 years, as will all of our peers. It will have been a bad 3-year period to invest in 45% plus privates, and it varies amongst our peers from as low as 20% to as high as 65%. But any exposure to privates measured over 3 years starting on 7/1 of this year will not look good. We retain faith in our model. And again, you can see that it's done incredibly well over time. And the pursuit of those unfair advantages will accrue to UVA's benefit in the future. But there will be times when it's not so evident. And I'm telling you now, And September, when I'm back, it will be one of those times. And I'll be humble and modest, and as I hopefully I always am. Quickly, yes.
Are there any investment guidelines? To invest in and not invest in, does that exist at all? Do you publish that at all?
Publish.
Any limitation that you don't invest in solar farms? You know, you don't believe in whatever. Is there anything that's more a social issue that drives your investment or lack of investment that you publish, and that you have been given instructions from the board to follow any social program?
No, we have not. Would you like to talk about the ACIR?
Sure. So a couple of years ago, we worked together with the university to form, and Robert already referred to it, an advisory committee on investor responsibility. That committee has 7 members. It has a student representative, a faculty representative, UVA leadership rep, UVA BOV rep, an alumni representative, one from the UVMCO staff, which happens to be me, and then one from the UVMCO board, which is Meredith Jenkins. And that committee really exists for a couple functions. First and foremost, to be subject matter experts on all matters related to investor responsibility and ESG, and to develop recommendations both at the policy level and implementation level for UVMCO to consider. So I think of it as kind of the sharp point of the spear on all of these myriad matters. We spent a lot of time as a group talking about what should be our overall approach to investor responsibility, and landed on one of engagement and integration. So it's really centered on being at the table, working with our managers, who of course are the folks selecting the securities on a day-to-day basis, and really working with them to affect positive change across the investment portfolio. I think of it always as kind of one security at a time. And so the ACIR came up with that recommendation and that philosophy that UVMCO in turn approved and adopted. And we have an entire framework that actually is published on the UVMCO website and annual reports as to the progress of our efforts across the portfolio.
So would that group specifically say, don't invest in these type of stocks, or does it not go that specific?
So the ACIR could make a recommendation to UVMCO of, any, again, philosophical approach or action that they would like to recommend, and then it's up to UVMCO and the UVMCO board to decide if those are appropriate and in the best interests of the endowment pool and the university.
Thinking that word could historically has it.
Correct. So again, talked a lot about, in particular, divestment and the extent to which it is effective at all, and came to the conclusion that for the University of Virginia, given who we are and how we do things, engagement is the best way to go. It's messy. It's difficult.
I don't have a vested goal. I just wondered historically, have we ever done anything here on this one? You're saying historically we haven't ever instructed a specific type of stock to hold or not hold, or investment to do or not do.
The ACIR was founded in 2021, and it has not made any such recommendation to you.
Correct.
Thank you.
To the president's point earlier, it's our managers that choose the stocks, not.
Well, but the managers can be given instructions. I'm just wondering, I was wondering, was there any instructions?
You can't do that. You can't tell an equity manager.
But we cannot invest in a fund if we didn't agree with their.
You could theoretically, over time, cancel a long-term relationship with a manager who you think
I'm not advocating to do it. I'm just wondering, has anything ever occurred? If the groundwork for this in my 8 years, I didn't believe so, and I was just checking to see if I missed something in the process. Okay, thank you. I wasn't suggesting we change anything. I just wanted to get a historical perspective. Have social issues been turned into instructions that change the investment focus historically?
No, they've been discussed significantly at the ACIR, which is great, because we can't internally be expected to be experts in all issues, but nothing has resulted in a recommendation.
Thank you.
mindful of time, we'll close on risk. With the performance report, you see a snapshot in time of our asset allocation. Here we're showing it over time. It tends to be gradual. You can see the long short has kind of shrunk to the benefit of private equity, but by and large, we don't swing this portfolio around. To do so would, in our opinion, court risk, and we don't like to do that. Which brings me to my final point. From a risk standpoint, we think of it in many ways, but primarily through market risk, liquidity risk, and manager risk. We don't want to take significantly more market risk than our policy implies, which is about a 0.75 beta. We don't want to, of course, take significant illiquidity risk, given that we are investing in private investment classes. And of course, as Jim, you pointed out, we execute our strategy primarily through managers. We don't want to be too dependent on one, and we're limited to 7.5% in any one relationship. And you can see equity beta risk than our policy today, around a 0.81 versus 0.75. That's generally been modestly accretive to returns, but we think in line. And then from a liquidity standpoint, we have more liquidity on a 3 and 12-month basis than the IPS would require, 28 and 45% respectively versus 20 and 35% outlined in the IPS. And then finally, our largest external relationship is 5.4%, so less than the 7.5% that we kind of are limited to. So with that, we'll close and see if there are any questions. Thank you for your patience. We've gone a little bit over time, hopefully not to the detriment of other agenda items.
What I might want to stop this, not giving you instructions and giving you instructions. So it depends what side of the public you're looking at. Either we're told that we're very woke and we give you instructions that hurt our investments, or we're told we don't. We should probably make it clear to everybody what the board's relationship was in that on the subject, because I'm not sure that I believe that those that follow us each have their opinion of what we do, and my opinion has been nothing is what we do. We let you guys manage the portfolio. But I can definitely show you written documents of recent that says we either are hurting the investment because of our instructions, or we're not doing enough because of our investment strategy is given to you. And the reality is we don't give them investment strategies at that level.
Although the ACIR process, Tom, we always listen. There's a good relationship between this board and the management of UVIMCO, and while they have no contractual obligation to listen, they're very good listeners anyway.
You exist to serve UVA.
I also think it's important to emphasize your orientation towards engagement,
Correct.
which, you're right, is messy, but that's the orientation.
Yes.
Just a quick question. I sit on the investment committee for my undergraduate alma mater, which is a mid-figure billions, not our billions. And we review our managers, I think, every 5 years. And you said you review yours every 10. What's the reason, good or bad, for that?
Well, we're reviewing our managers multiple times per
But you
year.
contracted with them. I'm sorry.
So when you enter into a private limited partnership, the life of that partnership is 10 plus years. They will be back to raise money from us often within 2 to 3 years. So at a minimum, you're evaluating them every 2 to 3 years. And within that time period, public, private, we are engaging with our managers multiple times per year. Hopefully that makes sense.
So we'll put our managers on warning after we've evaluated them, and if they don't perform in the next number of quarters, then we'll fire them or terminate the relationship. And I've never heard us talk about a contractual obligation. Is that something unique to UVIMCO, or we're just or just the way you arrange it?
Typical private equity terms are, like I said, 10 plus years, where they will invest the committed capital from us and the myriad other limited partners in that fund over 3 to 5 years, and then they'll distribute profits as they sell those positions over the next 7 years or so. And they have 10 years to do that, and that is very typical.
So on the
You
public
might distinguish between private equity, which Robert's speaking about, and public equity, absolute returns. There are other managers
That
whose
could be-
relationships we can
Yeah.
control much shorter
Right,
timeframes
that
than
could be
10
as
years.
okay,
Short as a
This
month.
wasn't across the board for all, okay, that makes sense. Thank you, Jim.
But I would say even in those asset classes, Jim, even if you invest and decide to get out, you're talking about a 3 to 5 year period.
Yeah.
Because they're never going to let you withdraw all of your capital immediately. It's going to be gated over a number of years. So you're making a commitment of, on the short end, probably 3 to 5, and then on the long end, 10 to 12, depending upon the asset class.
And we're often doing 12-plus months of work in advance, so it'd be very, very unusual for us to do that, to then try to move on from a relationship in a sub-1 year time period.
Absolutely.
To help with fees, do you co-invest a lot, or do you just strictly invest in the fund?
We like to co-invest. It's not a driver of our manager selection, but within certain asset classes, it's become a significant portion of our exposure.
Good.
How are the members of the Committee on Investor Responsibility chosen from the faculty and the students? And how do we find out who they are? I don't see them listed anywhere on your website.
I think we're going to be able to get more sophisticated in the future on that selection process, because admittedly, I kind of chose the faculty member based on, a number of faculty that I've worked with on these topics over the last 10 to 15 years. In terms of the students, it was, really a student-run process, probably not as well as the one that you use to select your student rep for the BOV. So again, that's something in my mind that we're looking to get better at in the future, but really asking for interested students to apply. And then myself and some of our staff members at UVMCO chose our former and current student rep. I have to admit I had an eye for younger students in both instances, really looking for someone who can be on the committee a little bit longer than 1 year. Mike Lennox is our faculty rep. He's on the faculty at Darden, and he's a scholar in this space. Gregory Perryman is our student representative.
Can I ask you to go back to the slide about the assets under management, the pie chart? The difference between the long-term pool and our endowment. I think often people equate the two, but am I right that of the long-term pool, which is about $14 billion, the endowment is not just the orange, but university-associated organizations may have endowments as well. So if you're looking at the whole, it would be, 51 plus 22, 73%, so roughly 10 billion, and the rest are reserves. Is that roughly correct?
Yes. Sure. Well, but I'll just speak from the perspective of a dean. So, a dean can have a lot of endowments that are kind of held within the rector and visitors and in the name of the rector and visitors. And then a dean, I always think of Darden because I went to Darden, can also have endowment funds or other long-term funds that are held in the Darden Foundation. But when I work with deans, they tend to add those together, right? So the dean's perspective, it doesn't really matter where it's sitting. They're like, this is the endowment for the school.
Which seems totally sensible to me.
Absolutely. The rector and visitors, again, is this orange. But yeah, so when I personally think of the UVA endowment, I always add the foundation. Place make it act very similarly to an endowment, and that it's really meant to preserve the principal over time and to use the spending to further the mission of the university, right? So
But those are self-imposed restrictions rather than restrictions that are part of, say, a gift agreement.
correct, except for if you take, for example, some SIF earnings and allocate it to matching scholarships, and then you do match the scholarships, then what happens is that money transfers from the SIF to basically the endowment, right? And so it ends up being a little bit fungible, but yes, it's definitely not an endowment per se in the strictest definition of the word.
Was the answer 14 or 10?
10.
10.
$15. The other 4 billion are long-term assets that are in the long-term pool. The restrictions, some pretty significant restrictions on spending.
But I think closing on the word correct is great because we started with nuclear and malfeasance, and I'd like to stop on correct. Give it to JJ. Thank you.
Thank you so much.
Thank you.
Thank you, appreciate it.
Okay, so I guess we'll move, we are out of time. So the next up is Pace Lochte, who I think many of you have worked with in the past. She is our Assistant Vice President for Economic Development and has had the unique honor and privilege of leading an incredibly important initiative for us on the affordable housing. To questions, because we're out of time and I need to know. Further ado, Pace Lochte is here. She has a slide deck. What we'll try to do is give her the expeditious way of getting through these slides. And move very then quickly to questions or comments. Tim Rose and Fred Missel are also here from the UVA Foundation. Tim Rose is the CEO and Fred Missel is the co-lead for us on affordable housing and an expert in his own right. So Pace, take it away.
Sure. Instead of the 10,000 view, we can do the 40,000 foot view. So you all probably have heard about this. It was really initiated as part of the Good Neighbor program, one of the key initiatives of the strategic plan. So the Board of Visitors has been very supportive of this over the years. Affordable housing is one of the 6 issues that was identified by the community as being important to work on with UVA. And as I understand it, affordable housing was the very top critical issue. It's a very clear priority for the community. Our goal is to support the development of 1,000 to 1,500 affordable units over a decade using land owned by UVA or the UVA Foundation in the city and the county. We're especially grateful to Mr. Brown and Mr. Murray for serving on our advisory group. You can see the members there. It's a mix of community and University Foundation folks. They provide guidance and deep expertise on this very complicated topic. We really started in earnest in 2021, and since that time, we really had to rely on affordable housing experts because this is not something we have done before. We announced 3 sites for the development of affordable housing in December of 2021. We issued an RFP for the developers in January of 2023 and identified the first 2 teams shortly after that. We have identified 3 sites. One is the Piedmont site, which is near Fontaine, sort of between Fontaine Research Park and the football stadium. It's about 12 acres, and it includes a historic property, the Piedmont House, that will remain. The second site is at the corner of Wortland and 10th. It's a smaller site, about 2 acres, but a very strategic site. It really is on the border of Town Gown. It's across the street from the UVA Medical Center. And really, and the third one is at North Fork, the Discovery Park that the UVA Foundation runs, and they recently were able to rezone 120 acres of that parcel for residential use. And so we are very excited about all 3 of those very high-quality sites. In terms of a timeline, you can see where we are. We're definitely pre-construction, and really, everybody wants to know when construction is going to start. Every one of these sites is going to be on its own timeline, but the short answer is that the critical path items are the financing and the entitlement process. So our best guess, based on our partners, is early 2026 for moving dirt. When we talk about how this works, it's been helpful for folks to understand what the roles and responsibilities are for each of the groups. I won't go into detail over this other than to say that UVA and the UVA Foundation have been working very closely on this. Fred and I talk almost every day about this. And their expertise in real estate development has really been critical to the process. So again, we're contributing land, the community's providing input, The developer is really doing the design, the entitlements, the financing, the community engagement, the construction, ongoing operation and maintenance for the sites. And the foundation is holding the key documents, including the ground lease and the development agreement. So the two partners that have been identified so far will probably be familiar to some of you. Piedmont Housing Alliance was identified as the development partner for the Piedmont site. And the Preservation of Affordable Housing, or POA, was the partner for Wortland and 10th. North Fork is still TBD. Again, that just recently got rezoned. We went through a very extensive process to pick them based on their qualifications and experience, how they perceive the financial stack as lining up, and their project approach in terms of density and housing typology. We had done a scan, we continue to do scans of what other schools are doing in the space. And we were really hoping to find a model that we could copy because we haven't, we don't have a Department of Affordable Housing to do this work. And what we found that you can see the states that are shaded in orange have schools that are doing something related to affordable housing. There are lots of different approaches. And I think the way UVA stands out is our combination, not that we're the only ones doing these three things, but we're the only ones doing these three together. And that is making them affordable, making them available broadly to the community, not limited to students and faculty. It turns out we stand out in terms of scale, the number of units, and also our contribution of land through a ground lease rather than a land sale. Interestingly, we've had a number of schools reach out to us wanting to know how we are doing this. They want to do something and don't know where to start, so it's definitely a topic that's been of interest to many schools. And then finally, next steps. The foundation is in deep final agreements with the development partners. There's a lot of due diligence that has to happen on the sites, especially these sites that have had a lot of historic background. The community engagement will continue on. The one thing that's important is that we want to make sure that we build something the community wants and needs. It would be a real, I don't want to say failure, but it would be if we wanted building something that the community didn't want or didn't need. So we're really trying to identify how we can be complementary to the ongoing efforts of many in this community who've been doing affordable housing for a long time. So I will wrap up there. If we have time for questions, I'm glad to answer them.
Thank you, Pace. One quick point for new members of the board, others have heard this. University of Virginia is investing no taxpayer dollars, no tuition dollars. We are leasing under long-term lease at a very low rate land that we otherwise do not have a use for. So we are doing this by using long-term assets by setting them aside for a while, but otherwise no taxpayer dollars, no tuition dollars.
This effort does not address the very strong concerns that, like the hospital for affordable housing for nurses and stuff. That's a separate effort.
Well, I mean, it could, I guess, depending on how much the nurses are making, where in the healthcare scale they are. I think there's been a lot of conversations recently about what is termed workforce housing and how we think about that rather than, the 80% AMI or less. Somebody that's making more closer to the 100% AMI, but still they're having trouble finding housing. All the conversations that were had earlier about the cost of construction, building research facilities, it's also true for residential. So pretty much everybody is in desperate need of housing. And I think there's some creative ways that the foundation and we have been talking about how to address that segment.
Another way to answer your question is we ought to be able to house nurses and school teachers and firemen and policemen in these units. The contribution of our land at zero cost to the developer takes somewhere around 25 to 30% of the entire development cost out of the project. That should be reflected in lower rents.
Ultimately, would be controlled by what we set the threshold for occupancy is, right? The income thresholds.
Oh, so the first two sites, certainly, will be 80% AMI or less, area median income. For Charlottesville, for a family of four, 100% AMI is $123,000. So, 80% of that, these people could qualify for some of these units that are being built.
Question. So when this is all done, these three developments will be owned by three different developers. Our role then is
It'll be
only as
leased by three different developers. We still own the land.
we own the land, and we'll be leasing the land to a developer.
Right.
But the project will be owned by the developer. We won't be a participant in the project itself? Or
Correct, correct. And
Correct.
at the end of the lease term, everything,
Reverts.
buildings, everything reverts to UVA.
And then what will our costs be at that point? We'll have to assume all operational costs. Do we have an idea of what they're going to be and from where they'll come?
Well, understand they'd be highly depreciated buildings, so that'd be for a future board many decades from now to figure out whether you'd want to demolish them, use the land for UVA purposes, or fix them up and rent them at market rates. There's a lot of things you could do. Turn them into dormitories.
But for the cost, or for the term of the land lease, the costs will be borne solely by the developer and the
Correct.
landlord. Maintenance, roads, zero cost to
Correct.
the university.
Correct.
Does the developer determine what the rate is, what the rental rate will be? Does he determine what is affordable?
So they will be relying on low-income housing tax credit and other federally and state-supported programs, and they will have requirements that it be 80% AMI or less in order to access those tax credits. So they will, and a lot
Does
of,
that convert into a two-bedroom apartment rent?
Yeah.
Is that
well,
a ballpark?
we don't know yet. I don't think we can tell that
Do you
yet.
have a target?
So what's complicated about this is that, a lot of people say, well, how many units are there going to be? What percent AMI? What's the rent going to be? And it's really going to be up to the developer to figure out how they can get financing and make it as affordable as possible, but they won't know that till they get their financial stack.
We have a target.
For the actual rental rate?
Two-bedroom apartment. A target.
I don't have a number for that.
So the answer is no.
It's under market rate.
The answer is no.
No, I don't.
Okay. I don't see how you can do this without a target.
Let's take that offline, because we do, I'm sorry, we have to keep moving, we're behind schedule. JJ, what's next on our agenda?
Great, I just want to give a deep sense of appreciation to Pace and Fred and Tim Rose and a large advisory committee who's been working on this since 2021, and Jim Ryan for his leadership on this initiative. I'm just going to move to comments. There were three other issues, but I think in the interest of time, the most critical is that we are knee-deep into working through efficiency studies and the budget in total. This year's budget is $5.4 billion. We are seeing many more needs and wants than resources available, so efficiencies will continue to be a premium. Second, what I would say is that we will be resolved. And we will lay out for you sort of all of the initiatives underway to control costs. In addition to that, sort of preliminary look at sort of the cost drivers in the institution, whether it be things like inflation, pay raises, need to add positions relative to compliance, and so forth. So I'll happy to take any questions offline, but Chairman, I'll turn it back to you, given we're way over time, and I know there's another committee buttressing this. Thanks for everyone's time today.
That was very fast. Let me just point out what you just said.
Yeah.
We're building the budget right now. So when a budget is brought before the board in June, that the opportunity to influence what's in that budget is happening right now. So the Finance Committee will be working with JJ, but other members of the board are invited to do that and to look at what's happening. But the budget is built bottoms up, and these cost and efficiency studies, it might take 30 seconds, JJ, I know we're late, but you talked about more demands than you have capital. Explain how that works.
Yeah, just to give you a sense of a microcosm in the academic division, we've seen almost $100 million worth of new requests for funds, and depending on where the pay raise is, incrementally we may have $5 million of new base funds. So to the extent that initiatives need to get done, and there are many, we'll be looking for internal budget cuts and cost savings and re-engineering to highest and best priority. So again, happy to do more at a later date or take it offline. We'll provide all of that in the orientation session in the April-May timeframe, and we'll publicly announce that in advance to you all.
And we had a concern in the last board meeting about the number of ad hoc requests that you guys are having to face, and the time that the team, in the 82 hats you wear, JJ, of responding to ad hoc board requests. Has that gotten any better?
Yes, I appreciate the rector and the president's assistance in that matter. We have many more issues than hours in the day, and so streamlining it through the board secretary, Susan Harris, and for me, most notably the finance chairman, Bob Blue, that has streamlined requests. And we are grateful for that because there is a lot to get accomplished between now and the end of the fiscal year.
Do we have any other further business, JJ? All right. With that, the Finance Committee is adjourned. I apologize for running over. However, I think the UVIMCO discussion was valuable. We're adjourned.